episode 17. This is August 2019.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We're just two local guys with so much to say. So listen to the Real Estate Braddahs today.
Hello, everybody. This is the Real Estate Braddahs here. Here's the legal disclaimer. You guys can read that. And Dean, so what's happening with you lately?
For me, I mean, on the sales side, it's been pretty good. I just came back from my family trip, though. I came back from Japan. We went to Hokkaido and Tokyo. It was fun because the extended family went, but it was very hot. So I would definitely recommend any travelers to not go in the July, August time. Again, if you please share and comment on my Facebook page for your chance to win a $20 Amazon gift card. This for the month of July, the stats were pretty interesting. And if you're like an OCD type of person, aesthetically is very pleasing. We saw all the arrows going upwards, and we had record highs. So record highs for both median, single family, and condo prices. So single families, we had was 835,000, an increase of 6%, and our median condo prices was 461,500, increasing 8% from prior year. Interesting, some changes from the last, I guess, 6 months. I would say was in the past we saw closed sales and days on market do. We actually, in prior months, we saw a decrease in closed sales. This month, we actually see closed sales going up for both single family and condo. Oh, there we go. And days on market, we saw increase also. So those are kind of like, I don't say conflicting, but going against each other, right? Because the days on market increasing is good for buyers, but the closed sales increasing is more for the seller side. But we do see active listings increasing, providing more inventory for the buyers. So next slide.
Just this pent up demand for like the summer rush before the school then.
Yeah. Part of it's seasonality. And then we have, I'm sure you're gonna talk about it as well as I will, the interest rates, right? So great time for sellers who are going on the market now. I mean, showing that we haven't missed the bull run. And so you have a few listers that are coming up, so they're not feeling like they missed it. For people upgrading, buying and selling, I have one client who is selling their townhouse to upgrade to a single family, and initially their mindset was to sell their townhouse, rent, and expecting the market to either stay the same or go down. But fortunately, we still were looking in the process, so they actually found a good deal. So they didn't get out of the market, which is good when we see stats like the ones we saw in July, where prices are still going up, because you don't want to be out of the market at that time and lose buying power. So that's good for that. Also good for investors to because for buyers, like I said, the days on market is going up and interest rates are going down, so that's great. And for investors, I think if you're buying for cash flow and for long term, I think it's still good time. Okay, so I think, Lean, you're probably going to talk about interest rates, so I tried to make some fun of it. So what have they been doing recently? And so I said, yeah, they've been making like mommy's ready to deliver. People who haven't had kids yet might not get it. So what do I mean? Just try say it another way. And we're saying, next slide, we say
I don't get the 32 week thing.
Oh, because when the baby's ready to deliver, it drops.
Okay. Okay.
So that's why, since like for people who can't relate, their interest rates made like Snoop Doggy Dogg, right? They dropped.
Yeah. or like an EDM concert where it
There you go.
drops.
See,
Yeah, there you go.
that's
That
a
makes sense.
generational difference. So bottom line, interest rates have dropped, and this is partly due to, or largely due to, the whole China deal with US and China, and mortgage rates have been falling for throughout 2019. So what does this mean? Even if you're not in the market actively buying or selling, so what, right? It's like your investment portfolio. You look at like your assets, you look at your liability portfolio too, right? You look at your debt portfolio and see what you can clean up, or clean up from time to time. So for owner occupants that have, all they have is their primary residence and equity in there, you can look at refinancing, you can look at debt consolidation. If you have credit card debt, or rolling things together, maybe um, two more first and second mortgage, think about some kind of refinancing, right? Investors thinking of equity tap, so you have extra powder for the next transaction, or waiting for the correction, right? Or even debt restructuring. I was talking to my financial, actually I guess my banker, and he had brought up, I have a investment portfolio, and I've been picking up smaller single family and small duplexes, multiplexes, and I've been investing getting loans at the investor rate. So, and he brought up the point that I have some equity in my residence, the place that I live in. So one potential opportunity was to tap into the equity, refinance out the place that I live in to get like a lower rate, which, I mean, they're quoting at like low mid threes, yeah, like 3.5, and replace the existing debt in my investment properties, which are higher, like in the higher 4%. And but also, I mean, consult with your CPA in terms of the tax implications, but there are options. Then sometimes talking to your loan officer can help. And there's also free sites. There are night owls on creditkarma.com, and they have a free calculator that you can input your information. It'll tell you if you should refinance or not, right? So always, think about that. Contact your loan officer. Call me if you want to, and we can just talk through it and see what your options are. And that kind of segues to my next point, which is building a team. So everyone should have a team, in my mind, regardless of what you're doing. If you're an entrepreneur, or if you're working your W-2 job, it's a very loose definition when I'm saying team. Like in the previous slide, how I mentioned my banker had brought up that idea, yeah, of restructuring. I think having these people in your life will help bring up possible things that could help you, opportunities, right? So, and you want members that are going to provide value, add value, even above and beyond what their capacity is. Like your CPA, you always need a good tax accountant, attorneys, throughout realtor, insurance agent, trying to reduce your premiums, loan officer, and personal banker. I mean, don't ever think that you don't have enough money to go to the bank and ask for a loan officer or a personal banker, that you're troubling them. A lot of the local bank, or a few of the local banks, are actually changing their strategy, and they're creating, there's a lot of relationship representatives in the bank, because they're trying to build long-term relationships, and they want to grow with you. So don't be afraid to approach your financial institutions asking for advice or help or guidance. Yeah. And then coach or mentor. Yeah. It's always great to have a mentor or a paid coach. You can get great ideas from these long-term relationships. And like I said, you want ones that are going to add value above and beyond what they have. So, some things that they can provide are, referrals for other vendors or for your team. They can give you ideas, opportunities, investment opportunities, trends. You know how we talk about what's going on in the market, or anything like that, getting ideas from there, and then of course motivation, right? And so you're looking for again value add above and beyond um, what their capacity is, and just think about that when it comes to like fees and commissions and premiums you pay, because if that vendor or that team member is providing you additional information, then that's all added bonus on top of what the fees and commission that you pay them normally. So yeah, I believe you are too, Lane. Believer in building teams in again the very loose definition of the term.
Yeah, I'll add a point onto like the coach mentor thing. Yeah, you definitely do have to pay to play at some point.
Yeah.
If you're looking for a mentor, and like, I think the number one mistake I see a lot are these guys. They don't know too much, but they ask a lot of questions, which is great to ask questions, but you don't want to be an asshole.
Right.
I said that right. Like,
Yeah.
don't ask question.
Yeah.
And you have to add some value to your mentor, because if a mentor is really that great at what they're doing, they're too busy to answer questions all day long for free.
Right. And to your point too, it should be a win-win situation, right? You should be giving back. It's the whole abundance mindset is you're not trying to take, right? You're trying to give back in any way that you can, regardless of if it's a mentor doing it for free or a coach that's you're paying for.
Right, but for some practical advice, I mean, some ways you can add value to a mentor is buy him lunch, buy him a drink. That's super cheap and super simple. If another idea is, here's another mistake. You never say, hey, how can I help you, Dean? That's probably the worst thing to ask, like someone like Dean or anybody, right? Like it's like, figure out what the person needs, especially if they're a much higher level than you, and you go out and do it.
Right. Be more proactive about it, because like to your point, I've gotten that too. And I've been guilty of that too, where people, you help them out, and at the end they're like, "Oh, thank you so much. How can I pay you back?" Or how can, like you said, Lane, if you actually proactively go out and do something for that person, it means so much more.
Yeah, I mean, a mentor is a mentor because they're killing it. Right. They don't have time to figure out things for you to do. Yeah, I don't have any time. I have to have people make all my meals for me.
Oh, that's the
food. The food. This is the commercial break here, guys. You guys are tired of making your own food and going to the grocery store, wasting all that time and cooking all day long, when you really should be doing more important things with your time. Here's a little coupon code. Use Aloha 10. Check it out, raaloha.com. The partnership we have with Good Clean Food. Paleo and keto meals there.
That's the abundance mindset, right?
Yeah, so if you guys want some free real estate education, you guys can check out my free podcast and my website, simplepassivecashflow.com. If you want to learn more about my story here, you can text ebook to 587-317-6099 there, and you can get a free copy of my book. So some headlines here. We only have like a few of them, but this is the elephant in the room. The Federal Reserve cuts the rates for the first time since the recession. So they cut it first time in 10 years, and which is a big deal, right? Because if you haven't been following the last dozen or so of these editions, by raising interest rates, that allows the Fed to store up dry powder. So if you think about the economy as sort of like sliding downhill, which you could argue it is or isn't, lowering the interest rate is a way of slowing that down or possibly reversing that downslide. So that this is, you just cut it once, guys, but everybody's freaking out, right? It's like people are very emotional about this stuff.
Not only that, but they're talking about potential reductions in the future on this year, right?
Right.
But prior year, they're talking about more increases. So.
Yeah, I mean, I don't know if like people get into it. They're like, oh, the Fed and Trump are like, they don't like each other. One's trying to make the other look bad. I mean, you can probably get into all kinds of arguments like that, but I just think that's kind of needless energy. I think people geek out on that too much. But nevertheless, I mean, interest rates are kind of all-time lows at this time, right?
Yeah.
As I mentioned it. Here are the candlesticks showing that for the past couple months, where we are. There's all this China trade war. I think the last couple of these monthly updates, we've been talking a lot about the China trade war. So if you guys want to go back, check that out. But so the China's yuan falls below this threshold of a 7 to 1 level, which is supposedly what the experts say is like a big turning point. Whether it is or isn't, people just like to sell newspapers and get clicks, right?
Yeah. And I don't want to say I geek out over the whole relationship with this and the Fed's monetary policy, but there's a question about election time is coming just around the corner, right? So how much is it of this is related to the political side of things, right?
Yeah, I mean, since you opened that box, right? Since you're like retired and you got nothing better to do than to talk about this stuff. So the story is like, Trump's up for re-election, whether you love him or hate him. I don't really care either way. He wants the economy to look good, right? And which is like he wants the stock market and equity markets to be on a high, not on a downside, so that people are feeling good. They like the direction of where the money is going. So he wants the Fed to kind of do things to keep the stock market up.
Right.
So there's this kind of play behind the scenes with that.
And you hear them. It's funny because like at face value, you see them going back and forth in terms of, or maybe from one side saying, they appear in disaccord, and you think of who appointed the Fed chair, right? And
right.
So
right.
all of these things, you don't know which way to think, but I mean, you read between the lines, and that might affect some of you part-time day traders in terms of how long more this bull market will carry on, right?
Yeah, I mean, like the stock market, who the heck knows, right? That's why you invest in real estate, because it's a hard asset.
Right.
So one market that's always been known as like leading the country in terms of occupancy is Portland in the Northwest. Not to say it's a good market to invest in. It's just a good indicator of what, just relative where occupancy rates going. They're starting to see some deceleration in those upper end markets. So just kind of wanted to highlight that real quick. Here in a different asset class, so Pizza Hut, all these other stores like GNC, Barney's, and then some even these triple net leases like Walgreens are kind of closing business or cutting back. Not to say, I think at face value you might be like, well, the economy is going to hell, right? What's happening, right? Or you could look at it like from a commercial real estate storefront. It's a changing times, right? With Amazon coming in. Amazon's bodybuilding.com and Amazon are putting GNC out of business for sure.
Yeah.
But I don't know. I personally feel like I like commercial real estate, like the commercial shopping centers, because you're always going to need to go get your plate lunch, get a haircut at these neighborhood centers, and that'll never go away. But I like it because a lot of like the unsophisticated investors run away from it and they think Amazon is going to take over the world, which they are. But me as a more contrarian investors, I also have one eye on what most of the dumb money is doing investor-wise. Some Hawaii news here. Senior housing project going in. You heard any of this stuff?
Did we talk about this last time? It sounds familiar. Maybe we're talking story about this.
Yeah, no, I think it was a different development. This is another one. Yeah, real estate can be done different ways. One of them is assisted living developments. I think there's no question that the silver wave, which is the baby boomers retiring, getting old, needing all these assisted living facilities, and it's like they're charging them like an arm and a leg. often people have to do reverse mortgages to get into these communities. And
Yeah. And like to your point, Lane, there is, I mean, that's the growing population, right? Are the baby boomers. I have actually a few clients who have been challenged with finding long-term facilities. I also have friends, out on the pickleball courts talking story, and you hear people, that's a concern. I mean, you look for the prices, the costs of these assisted living facilities are crazy, especially when you need that the nursing care, and it's not it's not an independent living situation, and that's when it gets challenging, and there are places popping up. I think they're like large residences being turned into um, assisted living facilities. But I think we must have talked about this a few um, episodes back, but they're popping up. And even I had a loved one stay in one assisted living facility out in Waipahu for a little bit. So, um, and it's challenging trying to find a good one for your loved one. So, to your point, Lane, I mean, there is a need for quality care.
Yeah, I think most people will go to like the more institutional ones. I don't want to say their names, but it rhymes with Laza. And but they charge you like an arm and a leg. If it were me and I had parents who I needed to get into one of these homes, I would go find like a nurse in my investor database who is doing one of these officially or unofficially, and go that boutique style. But I understand not everybody has that network to tap into. But
Yep, power to you, power to you.
yeah, but maybe you can use this one of these days. But yeah, that's your network is your net worth, as we say. Yeah. So we do these events. We're getting to be more of a members only group.
I know you're getting so exclusive, Lane.
Yeah, I mean you can't. I mean, I wanted to everybody knows each other, right?
Yeah, that's true. Squeezing out the riffraff, huh?
Yeah, I mean we talk about a lot of personal stuff, right? Like finances.
That is a good point. That is a very good point.
People.
Yeah.
So we got the Breakfast Club meeting on August 24th. This month we have a self-directed IRA summit this Saturday, tomorrow, and we have the after party for those who signed up to come to that. Any other cool things to check out?
Just want to reiterate, I mean, rates are so low now. Is a good time to look at your debt portfolio. As well as your asset portfolio, you should be looking at your debt side too. So let's just reiterate that.
And then for you guys listening, if you guys got any questions, type it into the question and answer box before we sign off. But going back to you said you had the Credit Karma calculator for the interest rates. Those are cool. They allow you to kind of calculate your monthly payments and find the deltas of what, if you were to refinance it, what would be the origination costs associated. I know some of these lending brokers, they make it really tricky, right? They bury the origination fees so they can say no fee loan, and they
rolled up into the debt, right, or something.
Yeah, well, they increase the interest rate, right? So like if their fee, which is usually 1% on your $500,000 house, is $50,000, well, they're gonna, instead of giving you like a 3.25 interest rate, they're gonna give you like a 3.5, 3.7. So it's all in the numbers. So that's how you got to compare your loans.
Yeah, and I mean that's a good point. And so, and on the opposite note of that, just to point out that after subprime crisis, there was so much regulation added on that now there's all this red tape, and you get all this paperwork prior to signing your closing, and you need 3 days when they do the disclosure and all this other things. But the challenge is that there's so much paperwork, it's hard to make ends. Yeah, so don't be scared to ask your lender the questions, and go through each statement line item by line item. If you don't understand, always ask, right?
Yeah, and I think all this financial stuff, it's made to be super confusing, so that people just automatically trust the guy in the nice suit, or I guess the aloha shirt, right? Who has nice slacks and tucks in his shirt. but you got to ask, right? Like it's got to make sense to you. And
Right.
you know, a lot of like stock market stuff, it just doesn't make any sense
Yep.
to me. So one question here: if you're already in escrow and the rates drop, does that mean anything for you? If you're already rate locked, do you want to rate lock in a decreasing rate environment?
Ooh, we need to get a lender on the phone, online. You want me to take that?
Yeah, I got a thought too.
Okay.
It
Well,
depends. It's more you as the homeowner and investor. Like you have different philosophies, right? I mean, Dean probably have different thought processes.
yeah. Well, I mean, a lot of times if you have made the decision to lock, you don't have too much options. I think you might have to pay extra money if you want to get out of that lock, is my understanding. So, and actually, I was in that situation a few months ago, and I asked that question too. And the funny thing is, we're running long on this is a cash out refi process, and we were running long, and it was coming to the deadline. So I brought up the question, well, why don't we just let the lock expire, and then relock? And the response I got from the loan officer was that, oh well, it's again, it's a small local bank, not in Hawaii, it's a different state, but she had said that that's not possible because we'd have to wait a month before we went through the loan process again, and that's a control to make sure that people aren't gaming the system, like how, I guess I wouldn't say I was trying to, but for the small banks, that's a control they have in place. So I mean, unless it changed a really large portion, I probably wouldn't pay a premium to relock. And that's another question you can ask your lender, because they can run you the numbers where what will make sense. You know, if you have to pay an extra amount to lock, then calculate what's your break-even point on when you're gonna make that money back, right? It's kind of like paying down your rate in points, right? Your lender can calculate what's the break-even. You know, if it's going to be like 7 years, where if you hold it longer than 7 years, it'll pay off. But anything before that, you'll lose out. So at this point in time, I kind of stopped worrying about these you know, do I have the best rate? Calling my lender every day to see if this is the best rate. I mean, I think, you know, to your food, buying your food prep thing, it's kind of like you got to pick and choose where to spend your energies. Yeah. And to me, trying to figure out daily if I should lock because it went down 10 basis points is not worth my time.
Yeah, I totally echo that. That are more important things to do, but you still have the option to do like a 30-day lock or 45-day lock or something like that. If you if you do like tarot cards, you got a crystal ball, and you kind of know which way things are going, you might be able to like lock for a more extended period of time, but you got to pay for that.
Yep.
And like you know, you don't know which way it's going. Nobody knows, right? So if to me, if it's unknown, I'm not going to pay anything to go either way.
Yeah, don't be greedy.
Yeah.
Look at the rates now. I mean,
I mean, in my opinion, like I think Dean was kind of getting here. I would just pose the question to your broker, your loan broker. Say, hey man, like, what would you do in my situation? I mean, you watch these little candlesticks all day long, or he should. I mean, what else is he doing? Just clicking on top of a computer, not doing very much.
Right.
And what would you do? Because at that point, they're going to get their commission either way.
Yeah.
You know, so you're getting a very biased opinion.
Right. I try to do that with vendors all the time, where I'm like, oh yeah, what would you do? I'm not gonna hold you to it or hold it against you, but if it was you, what would you do? You put it that way to them, yeah.
Yeah. Or like when you go to a restaurant, what do you think is the two best things?
Right. Just gotta make sure you ask the question the proper way and to get your the response you want, right?
Yeah, but I totally sympathize, right? Like when you're buying these large properties and you're getting, 0.25% different, does sound like a lot.
That's true.
But I don't know. I mean, I worried about it when I was buying my first 5 rentals, and after that, I just stopped caring. So it's just one of those things.
Right. Because you're off looking for the next deal, right?
Yeah, bigger and better things. Yeah, especially when you can't control it, right? You worry about, there's concerns and worries. Concerns are things you can do about it. Worries you can't do anything about. This is a worry.
Yeah.
All right. If anybody doesn't have any questions, I guess we will sign off, and we'll see you guys next month.
See ya.
Bye.
Free real estate investing group, check out reialoha.com.
We're just two local guys with so much to say. So listen to the Real Estate Braddahs today.